All right, all right. Welcome, everybody. Hope everybody's having a great evening so far. Thanks for joining us. First and foremost, my name is Adam. If I haven't met you before, nice to see you guys on the call tonight. And thank you for spending some time with us this evening. Really appreciate it. In just a minute, I'm going to be introducing my co-host, Benjamin Adams, one of the top mortgage professionals in the entire country. And tonight is actually the first time that we're running a brand new version of our webinar. We do these every single month, sometimes twice a month. And it's always focused just on, buying a home in Denver, all the strategies that really what it takes today to succeed. We'll go over a little bit of that tonight, but really what tonight's all about is just affordability here in the Denver market. Because if you've been thinking about buying, you've probably asked yourself, does it even, make sense right now? And, between the interest rates, monthly payments, just everything you're seeing in the headlines, a lot of stuff with the war going on this week, it's very easy to feel stuck. But we are still seeing every single week as we're working with buyers, that's not just the people that can't buy, but they just don't have the right strategy. So the buyers that do have a strategy, they're the ones that are still finding opportunities, they're still negotiating deals, and they're still moving forward with confidence. So tonight, we're going to be showing you guys what's actually working right now in Denver, specifically around affordability. But before we jump in, just wanted to do a quick housekeeping note. If you guys are on your desktop computers, if you're on a computer versus a phone tonight, on the right-hand side of the screen, you're going to see a chat feature. And if you click on that, feel free to type in any questions that you have as we go through the content tonight. We definitely want this to be interactive and engaging. So if you have questions, feel free to type them in and we'll try and answer them in real time. But if we can't, we'll definitely make sure those are the first questions we'll answer at the very end. So with all that being said, again, guys, great to have you on, and let's get started. I'll introduce, like I said, Ben here in a second, but I wanted to first just start off with a little a few slides just to kind of talk through everything that we're seeing on a daily basis. Affordability has become the number one challenge for buyers in Denver right now. And what most people aren't realizing is that there are still very real ways to make it work. And the market didn't become impossible over the last few months. It just changed. And the buyers who understand how to adapt are still getting great deals today. Most buyers are either waiting or they're guessing. And that's exactly why they keep missing these key opportunities. And that's really what's oftentimes right in front of them. So you don't need to rush, but you do need a plan. And the best homes are always still going to buyers who are ready before they ever even tour a property, because timing doesn't always beat strategy, but confidence always beats guesswork. And preparation is what we're seeing is what saves buyers real money. So if the right home does pop up here in the future, you should already know what your next move needs to be. And hopefully after some of the stuff and the strategies that Ben and I will be sharing with you guys tonight, that'll help out a little bit when it comes to it. So we're going to be showing you the strategies that Denver buyers are using today to still make sure that they're getting lower payments. They're actually able to compete and win. And if you understand this, you're definitely going to be in a position above 90% of buyers out there. A lot of what we're talking about tonight is around the financing topic. That's why this is a brand new webinar that we're doing tonight for the first time, all about affordability. And with that, I'm excited to have Ben joining. So Ben, welcome. And before I let you talk, I'm kind of talking your ear off here, but I just wanted to give a couple just kind of claims to fame of Ben, a few reasons why I have a ton of respect for him. First and foremost, Ben and I have known each other for several years. I bet we're probably pushing 30 years at this point, which is pretty awesome. Don't have many other friends that I can say that about, but what I love most about Ben is, yes, he is a very experienced quality lender, but also he practices what he preaches. Not only with real estate, he's got a ton of investment properties. He is in this every single day, just like I am. But also, he's very passionate about financial literacy and just really being a resource for you with really any questions you have, whether it be about a loan on your home or even about financial education for your children, just anything you can think of. Ben is really passionate about it all. So, with all of that being said, Ben, welcome.
Well, thank you so much for having me. What a warm introduction. Thank you for sharing that. And it's true, I just want to be able to help people make better financial decisions. I put myself in a lot of buyer's shoes, and I wasn't given a lot of financial literacy when I was a young person. There was no formal education. I didn't learn a whole lot from my parents, and so I had to make a lot of mistakes. And now I want to be able to help serve others and share the wisdom that has been poured into me from the market, from others, from mentors, and give that back. And that's why I'm so glad to be here tonight. So thank you for having me.
Yeah, I appreciate that.
And let me introduce you with all that said. So why listen to Adam? Well, Adam is a 42-year Denver and Colorado native. He recently ranked fifth out of 344 Denver agents in sales volume. He's also a certified real estate negotiation expert. That's really important for some of the strategies that we're going to be talking about tonight. You have to have negotiation, and negotiation is part of it. Really getting seller concessions, seller credits for permanent buy downs, temporary buy downs. So we're going to talk about that here in a little bit. Adam is also the host of Living in Denver YouTube channel, and he's the co-host with me on the Pursuit of Progress podcast. So Adam, thank you.
Yeah, man, excited to go through a lot tonight. I mentioned a few minutes ago, you guys, about that chat feature on the right-hand side of the screen. Just a little pulse for the room here. If you guys are able to leave a comment in the chat, just would like to get a little bit of a feelers out there for how you're feeling right now. Are you overwhelmed at the moment? You feeling like affordability and just this idea of buying a home in 2026, does that feel possible? Is it totally a pipe dream? Kind of on a scale of 1 to 10, where are you guys feeling right now? If you can, leave us a little comment in the chat just so we have a better feel for how the room's feeling tonight. But before we jump into some of these strategies and just a lot of content about affordability, I always share a version of this slide on our other Denver homebuyer webinars. And these are just a few statistics, a few metrics, just to kind of get your eye on if you aren't that familiar with the Denver market right now. This is stuff that's happened over the last really 3 to 6 months. Some of this stuff is for 2025, which comes out only annually, once a year. And I've got the most recent info in here for that. So in late 2025, the median home price here in Denver was around $558,000. As you guys have heard us maybe just talking about in the last few minutes, or if you've just been seeing in the news, it is a very big buyer's market at the moment. And what that means is there's a lot more inventory of homes, a lot more sellers than there are of buyers. Ben actually just shared a statistic about this. Ben, what did you say the number was? Like 600 and something more sellers than buyers?
Yeah, right now nationwide, there's 630,000 more sellers than there are buyers. So exactly what you just said, buyers for the first time in a long time, at least 15 years here in this Denver market, really do have the upper hand. There are going to be certain price brackets that are a little bit more competitive than others, but big picture, buyers now have negotiating power. They can ask for sales price reductions. They can ask for seller concessions, and all of those strategies can be used to help really impact and tackle monthly payment affordability, down payment affordability, and also paying for closing costs as well.
Yeah. And again, I won't go through all these tonight, but just really hitting home that there's a lot of opportunity right now for buyers, but with the caveat, just really want to put this out there too, only if it makes the most sense for you in your specific situation. Obviously, every single person has a different background, a different story, as far as just the budget that they're, trying to put down for their home, all these different factors. So always it makes the most sense for you when the time is right for you. So this isn't a blanket statement. Just wanted to put that out there. But tonight, as Ben and I both have been teasing, we're going to be talking through 3 strategies that smart buyers are using to win in Denver right now as we go into the middle of April 2026. We'll go through all three of these in more depth and detail, but we're going to be talking about how buyers are lowering their monthly payments right now, hidden opportunities that most buyers are missing, and what's actually working in Denver, but also what's not working. So excited to go through each of these. So first off, talking through just how buyers are lowering their monthly payments right now. So the biggest affordability challenges that buyers face, Ben, I think you're going to be the one that's really going to be spearheading a lot of the talk tonight as far as from your expertise, since you're in the numbers on a daily basis. But talk through just what the 3 of these are and just why you think these are the 3 biggest affordability challenges right now.
Yeah, so let's face it, things are expensive right now, nationwide, and especially in some of these higher price markets like Denver. When you look at our home values in Denver, at or near an all-time high. I just got my Jefferson County property assessment in the mail, and even though home values have not increased substantially in the last 2 years, guess what happened to my property taxes? They went up. I've been in my home now for about 10 years, and my property taxes have nearly tripled in their annual costs. So home values at an all-time high, property taxes are at an all-time high, homeowners insurance. There's a little bit of a homeowners insurance crisis that's happening right now across the United States. Some of it is more regional based, but when you look at things Here in Denver, for example, we've had a lot of wildfires recently in the last 10 years. We've had a lot of hailstorms, roof issues, and the insurance industry is going through a rapid transition right now. And what you're seeing is that insurance of every type, premiums are increasing. So property values at or near an all-time high, property taxes, homeowners insurance. And then Adam, you can speak to this a little bit with HOAs. HOAs on townhomes, condos, those are also increasing. And so monthly payment affordability is a really, really big thing. Buyers with all of those variables are really feeling it. And I forgot to mention one of the most important ones, interest rates. Now, interest rates have trickled down here a little bit at the start of 2026, but with the recent Iran news, some of the geopolitical tensions that are happening, rates have climbed back up in the mid to kind of high sixes, even though we were below six just a couple of weeks ago. And so when you factor all of that in, it does impact the monthly payment. Now, the whole point of this and the whole point of some of our other content that we put out is that what's one thing that you as a buyer have control over right now? You have the upper hand. You have leverage in this Denver market. There are more sellers than buyers. So the sellers need you, prospective home buyers, to sell their home. Especially if a home has been on the market greater than, I would say, I mean, what do you think? Like 2 weeks, Adam?
Yeah, 2 to 3 weeks.
So once you see that a home has been listed 2 to 3 weeks, that is a great opportunity where you as a buyer, you can say, you know what, I'm going to have some negotiating power. But you also want to be working with an agent that is not afraid to do some negotiating, because some of these strategies that we're going to be talking about are really incorporate getting the seller to pay for all of your closing costs, or getting the seller to pay for a temporary interest rate buy down. So the first strategy that I wanted to talk about was the temporary interest rate buy down. Are you able to bring that screen up, Adam?
Yep, I sure do.
Okay. And so this right here, this is an example of a temporary interest rate buy down. So in this scenario here, if you look at the top of the screen, we have a loan amount of 500,000. We have a market rate of 6.5% up in the top left-hand corner there. This is a 30-year term. Property taxes, we're going to estimate at $200. Homeowners insurance, $195. And then there's a small premium there for the monthly mortgage insurance. And so all of these are different types of buy downs that you can do. So in the top right-hand corner is a 1-0 buy down. Top left-hand corner is a 2-1 buy down. And then down below there is a 3-2-1 buy down. So let's go ahead and just for this hypothetical calculation, let's look at the 2-1 buy down. So if the interest rate in year one, if the note rate, is 6.5, in year one, the interest rate will be 4.5%. And you'll see that that's going to bring the monthly payment down by $626 a month. And so the payment is going to be $626 per month. It's going to be $626 less every single month for the first 12 months. Starting in year two, the interest rate will then go up to 5.5%, and the monthly savings will be $321 per month. And then finally, starting in year three is when it would mature to the note rate of 6.5%, and then that is when the payment would also mature at the 3607 there. Now, the reason why the temporary interest rate buy down is such an amazing strategy during interest rate volatility, where interest rates are kind of going up and down like they are right now, is because it's a great way to hedge against interest rate risk. Because this right here, it says the total buy down for this loan is $11,379. So you would need to be working with an agent like Adam, who would then negotiate or ask the seller to contribute $11,379 toward your buy down. So Adam, in this example, would ask the seller, please, when he's writing the offer for the property, he would ask for a seller concession of $11,379, and then assuming the seller approved that $11,379 is placed in your escrow account after closing. So that's actually your money, and it's put into your escrow account. This is considered a subsidy. It's not considered a cost. And the reason this is so great is because if interest rates do come down, there's a lot of variables. Hopefully this Iran conflict will end soon. There's also been talk about getting a new Fed chair in. so there's a lot of things that can influence interest rates. But if interest rates did come down within the first 24 months, whatever the prorated dollar amount is of this buy down, you get that money back. So it's not a cost, it's a subsidy. It's very, very different than a permanent interest rate buy down. If you did a permanent interest rate buy down, that's considered a cost. So you would pay a fee, a one-time fee, to obtain a lower interest rate, but then that would be fixed. And if rates came down and you wanted to refi, that money would be gone. With the temporary interest rate buy down, this is actually your money. It's placed in your escrow account, and you can see how much of an impact it makes on the monthly payment. $626 less the first year, $321 less the second year. Look at the 321 down here. First year is going to be $915 less. Second year, $626. Third year, $321. So this is a great strategy to hedge the interest rate market, take advantage of a lower rate and a lower payment with really not having to give up a whole lot. The biggest thing is getting the seller paid concession for the subsidy accepted. Now, there's a lot of agents out there where that they would be very intimidated to ask for a subsidy. They would be very intimidated to go to the seller and ask for a $10,000 concession or a $20,000 concession. But when you work at the professional and they understand what your goals are, that is how you do it. And it's a way to make this purchase more affordable.
Can I add one thing, Ben?
Yeah, go ahead.
So just for anybody out there that is maybe not a numbers person, and I do apologize for any of you that were maybe squinting a little bit. I just realized it's kind of hard to see on a few of those numbers that Ben had shared with me. So apologies for that. I can always share that with you guys after tonight's webinar as well. But a lot of people that are maybe not thinking from a numbers perspective, more of just a conceptual. Let's just say that right now you've got a budget of a $500,000 home. That's what you're looking for. And you identify some homes that have maybe been sitting on the market for over 30 days and realize that those sellers are probably motivated at this point where they would probably accept an offer below that $500,000 mark. So what Ben's talking about is, rather than offering, let's just say there's a $10,000 amount that we think that we can, get the home for $490,000 instead of $500,000.
Okay.
What Ben's getting at here is, rather than offer $490,000 as the purchase price for the home, rather than having that be what the offer is to the seller for us as the buyer to try and get the home for $490,000, we still put in the offer at $500,000. However, in the different part of the offer, we have that they are putting down that $10,000 as a seller credit, and that's going to be used for that buy down that Ben's talking about. So whatever the dollar amount ends up being, I'm just using this as an example. Because Ben, maybe just real quickly, just kind of share the value of kind of understanding that $10,000 difference on the sales price versus on the 2-1 buy down as an example.
Yeah. So from the seller's perspective, those are going to be considered identical offers. If the home is listed for $500,000 and you're going to write as a buyer, you want to incorporate a $10,000 reduction. You have the option of writing the offer at $490,000, or you have the option of writing the offer at $500,000 with a $10,000 concession. So from the seller's perspective, those are identical offers. Now, from your perspective, though, they're going to be very, very different. Because down payments are usually percentage based, the difference between a sales price of $500,000 and $490,000 as the down payment. So if you're putting 10% down, the difference between $500,000 and $490,000 with a 10% down payment, that's going to be very minimal. And because the amount financed, the loan amount, is going to be very similar, and the fact that these loans are amortized over 30 years, the payment's going to be very negligible. The down payment's going to be very negligible with that first option, asking for the sales price reduction.
Yep.
So where it's not going to be negligible, though, is if you are trying to get that payment down, you can see how much of a difference it made that first 24 months, where that $10,000 is literally taken from the seller's proceeds, put into your escrow account with your mortgage servicer, and then that is used to fund the subsidy for the temporary buy down period.
Very cool. I see a couple questions coming in. Let's just kind of keep moving on, Ben, and then we'll address those first here just to make sure we get through everything. So next I want to talk about the hidden opportunities that most buyers are missing. This is a really good one. So kind of a little bit of a piggyback on what we were just talking about with identifying some of this stuff, such as the days on market, anything over, 2 weeks, 3 weeks. That used to be a long period of time a few years ago, when there was 10 offers on a home on the day that it went on the market. It's a little different than it was in 2019 as it is today. But, right now, the number that I'm kind of using for some of my clients is if we see a home that's, at least 2 to 3 weeks on market, that's usually an indication that that home probably wasn't presented perfectly from day one. They probably didn't do some of the cleaning that needed to happen, maybe some minor cosmetic upgrades, stuff like that. So it really presented as well as it possibly could. So those are great opportunities, again, to find some of these that maybe are still great homes. They just need a little bit of TLC. And oftentimes when you start to see homes that are on the market for a period of time longer than 30 days, these sellers are going to be more flexible on the price of the home, but also some of these seller concessions, terms. A lot of this stuff ends up not even being talked about because the buyers don't even look at homes. Sometimes if they see them sitting for a long time, they just, assume that there's probably something wrong with the home. And sometimes there is, but other times it's stuff that could be pretty easily overcome if you just, got creative a bit. So, where to find some of these hidden opportunities, homes that have been sitting on the market for a longer period of time. Any price reductions are usually signaling that those are motivated sellers. Any listings that you can see that have come back on the market. This was really common about a month ago. I was seeing a lot of homes that had been listed at the end of last year, and maybe their listing agreement ended at the end of 2025, or they just realized that the holidays around Christmas time, they were better off just taking it off the market. And then by doing so, they can have it show up as a new listing once it's been off the market for over 30 days. So we're starting to see some of this kind of stuff. And also just the poor marketing is a big one. So if you guys are just, kind of DIY, do it yourself at this point where you're just on Zillow searching for homes, you can even probably just from looking at a bunch of homes on Zillow, be able to pretty easily identify some of this stuff as far as, homes that are very poorly represented with, bad pictures. Hopefully not, but I even still see few that are just even with iPhone cameras and not even professional pictures. That kind of stuff are just really good indications that the sellers might be motivated and it could be opportunities there underlying. So just a few good tips there. So how to take advantage of some of this stuff. Again, don't assume that something is wrong. Make sure you still do that investigation. One of the best ways to do this, if you do feel a little bit uneasy, maybe uncertain, maybe you're not good with mechanical systems, you just don't even know what to look for. This is your first time buying a home. Don't worry about it. There's still plenty of resources available to you between a very competent realtor, somebody like myself, as well as making sure that you always have an inspection done on the home once you get it under contract. So there's still plenty of opportunities to do some of this even after you get the home under contract. But definitely look for the sellers that are willing to, do seller credits, maybe even do some of these repairs that are identified during the inspection. There's just a lot of opportunity for leverage as a buyer right now. That's kind of the biggest thing right now. Ben, before I move on, is there anything you want to add to that?
I think that's great. I didn't get a chance. I was talking about the buy downs so much that I was going to talk about some down payment assistance options. And,
oh, sure. Let's just talk about that right now. I agree.
Oh, okay, great. So kind of going back to that initial conversation. So we talked about how to get the monthly payment down. Now, if you're someone who maybe you're less concerned about monthly payment, but you're more concerned about down payment, also an important part of affordability. Maybe you have a dual income household, or maybe you're going to be on the loan application, but your wife isn't. And so even though your lender is going to qualify you only with your loan, you know that there is extra resources in the family household to make that mortgage payment that your lender is not going to consider. So you're not as concerned about the monthly payment, but you're more concerned about the down payment. Well, there are going to be down payment assistance options out there. Right now in this Denver marketplace, we have minimum down payment options, we have reduced down payment options, and we also have down payment assistance options as well. Right now, Colorado Housing and Finance Authority, also known as CHFA, is the largest non-for-profit housing agency in the state of Colorado. They have about 15 different down payment assistance options. And what's great about CHFA is they have very high income limits. Some of their loan programs have income limits as high as 160, 170, or 180,000. And some of their programs are offering significant down payment assistance. I just closed one a couple of days ago, and this individual was a first generation home buyer, meaning that they were a first time home buyer and their parents had never owned a home either. And even though the sales price was only around 325,000, they were able to get over $25,000 in down payment assistance through the CHAFA first generation program. So that first generation program with CHAFA, if you're a first time home buyer and your parents have never owned a home, is currently at 25,000. Also, but let's say that you're not a first time home buyer. Maybe you're someone that owned a home 10 years ago. You just don't own a home right now. In that case, you are not disqualified. Even if you own a home right now and you're selling that, there are still down payment assistance options out there. And so if that is a concern right now, there is a way. And then if you can do down payment assistance, and then you can also get a seller concession with what we were talking about earlier. Instead of using that for a buy down, you can use the seller concession to pay for all the closing costs. And so you can get into a home right now in Denver with as little as $1,000 out of pocket.
Wow.
And so that is happening right now. Over the past month and a half, I've done a total of 7 down payment assistance loans. And that is the type of strategy. And for folks that are a little bit more sensitive to down payment, this is a great way to overcome that. So we talked about monthly payment affordability. If your down payment is a concern, there's a way to tackle that and a way to get around that as well.
Love that. Very, very inspiring. Thanks, buddy.
Yeah.
Okay, so let's just jump now back into where I had left off, which was just, the third and final one, which is what's actually working in Denver and what's not. So some really good stuff here. What used to work is not necessarily what's working right now. And what used to work, an example of this would be back in 2019, for any of you that were, at least in the Denver market at that point, really across the entire country, when we had very, very low interest rates. A lot of people were coming in way over the asking price, no contingencies, basically nothing, just as is. That's no longer the winning strategy. That's not how you win offers. What's working now are really clean, well-structured offers that have very thoughtful, strong terms, creative at times, flexibility, and just very smart negotiation, not just the highest price. And this is something that I'm very, very big on in our other webinars that we do, which is all about understanding the seller's motivation. And I won't go down a big rabbit hole here, but it is so important to understand the motivation for the seller and why they're selling the home. And the best way to do this is just for the agent, whoever you're working with as a buyer, for the agent just to pick up the phone and talk to the selling agent. And the selling agent, if they're strategic and smart, they're always, trying to be somewhat reserved and not saying too much. But the whole point of this is understanding there's a lot of other reasons to sell a home other than just price. It might be a home that's in probate. Maybe one of their parents passed away and they need to, sell the home for that reason. Maybe it's a divorce. Maybe it's a family and their children are out of the house. They're graduating high school and they're going to be empty nesters. All of these types of factors can also play a role in how the offer is written up and how you can really stand out among others, because you're doing this extra bit of work to really understand how the seller is best positioned and creating a win-win scenario where everybody feels like they're excited and just in a good structured deal. And this is so, so important. So that's why, this key takeaway is it's not about overpaying, it's about positioning. Mm-hmm. So again, what's not working right now, overpaying just to win the deal, waiving some of these key protections without a strategy. What I mean by this is, offering a let's just say as an example is a cash offer. You can't do this if you have a loan, but if it's a cash offer, you can waive an appraisal. And that'd be an example of you're waiving a key protection without really having a strategy behind it. Also, I think probably the biggest one right now for a lot of people that are just sitting on the sidelines is just waiting and hoping that rates are going to drop before taking action. And yeah, a lot of people are going to follow that. But as you guys can see from what Ben's talking about, there's so many other creative ways to still win today. And oftentimes with a lot less competition with other buyers, because so many people are living in a state of fear at the moment and not even considering some of these strategies. And then last but not least, just writing these very generic copy paste offers, not getting a better feel for the seller's motivation and structuring the deal accordingly. Ben,
Yeah,
anything you want to
and
add
I
on?
just wanted to add that that's why it's so important to get pre-approved. Not only number one, do you want to take those steps to get pre-approved just to make sure that you do qualify and there's not going to be any hassles with the financing, but more importantly than that is you want to be able to know what your options are. What is your purchasing power? Are you eligible for any of these opportunities or these incentives? Are you a first-time home buyer? Are you eligible for down payment assistance? Chances are you probably are. Or are you more interested in something like a 2-1 buy down? Every set of buyers that I work with has a different set of goals and they have a different set of values that are important to them in that phase of life. And so, what I try and do with all the customers that I work with is I want to know what's most important to you right now with this current stage of life that you're in. Is it monthly payment? Is it down payment assistance? Is it reduced down payment? When you let me know and you share that with me, I can then tailor a specific loan program or a financing package, or structure the financing in a certain way that is then going to be able to meet your needs and goals. And then from there, you get to make an informed decision based off of what is in your best interest. And maybe it makes sense to start looking at homes right now. Maybe it doesn't make sense. Maybe you feel like you want to wait another 6 to 9 months. I'm not here to make decisions for the buyers that I work with, but I do want to empower them and give them the information, the resources necessary so they can make informed decision based off of what they feel is in their best interest.
Yep, very well said. You don't know what you don't know. So what is working right now? So again, the opposite of what the last slide was talking about. So what is working right now? Again, clean, very well structured offers with strong terms, flexible timelines that match the seller's needs, strategic use of some of the creative solutions in the offer. Again, we talked through a lot of this on our other webinar. So if you guys haven't attended that one yet, make sure you join us on the next one where we go into this in a little bit more detail. But an example of this, I'll just share really quick, would be a post-closing occupancy agreement. So like the example of the family, let's just say, since it's right now the end of spring, we're getting into the end of the school season is what I meant to say. So let's just say there's a family that has a son or daughter that's graduating this year. They're trying to sell their house and downsize. They're going to be empty nesters, but it's really important to them to still have their home that their children grew up in, still have it for the next couple of months while they do some graduation parties and just can, kind of end their children, the time that their children are in the house, kind of really enjoy those last few months. Well, one example of this would be a post-closing occupancy agreement where in this offer that we structure, because we picked up the phone and learned what the motivation was of the seller, we can put something creative in the offer like a post-closing occupancy, or it's called a PCOA. And that would be an example where we have the closing date still structured where it's maybe 30 days from now. But then at that point, the seller basically becomes a tenant of the buyer for up to 60 days after that point. And basically they're able to either stay in the home rent free, or we can determine a dollar amount per night that seller will then be paying you, the buyer, as a post-closing occupancy. And this allows them not only to be in their home a bit longer and enjoy that bit of time that maybe is really, really important to them, but also it's a way that they then now have collected all of that cash from selling their home. And that seller is also now in a much more advantageous position to put an offer on a new home. Because, for example, if they're putting an offer on a new home and it's contingent on them selling their home first, that's not nearly as strong for them. So it's really, again, a way to create these win-win examples of win-win solutions where it's not just about the buyer. Obviously, as like a realtor, I'm always dedicated to my client, the buyer, if it's a buyer that I'm working with, but there's still ways that everybody can feel, happy and confident to be moving forward with a deal that's structured the best way possible. So it's just that smart versus highest price deal that oftentimes is the ones that win.
Yeah, and I think this is so important that you're sharing this, Adam, because when I first started my real estate and mortgage career, I always felt that for one side to win, the other side had to lose. And as I got more experienced, I realized that was a flaw mentality. The best offers, as you just shared, are offers where both sides can win. And one thing that really stands out about Adam is that I can't tell you, and let me back up real quick. So, working at North Point Bank, I get to work with prospective home buyers and real estate agents all across the United States because we're licensed in all 50 states. And there are times, so many times, where a buyer's agent will submit an offer to a seller without without not have even made the call to the listing agent. Didn't call the listing agent, didn't ask any questions, didn't ask what is your seller looking for. They just submit the offer in. And so when someone like Adam, who does this with every buyer that he works with, calls the listing agent, asks some of those questions, what's important to your seller? Is there a specific closing date that your seller would like to close on? Is your seller looking for a certain amount of earnest money? Is there anything else I need to know that would make our offer to your seller more attractive? And then he will incorporate those things for the seller while still representing the buyer. And maybe his buyer is going to ask for $15,000 in concessions. Well, he's going to ask for that, but he's going to ask for the $15,000 in concessions. But if the seller is looking for a specific close date, and if they're looking for a specific earnest money amount, and all these other things are being checked off their list, they're going to be more inclined to work with him and the buyer that he's representing.
And the only thing I would add to that is, one of the most stressful times in real estate as a home buyer, as a potential home buyer, once you get under contract, is the inspection phase of the contract to close. So once you submit an offer and it's accepted, at that point we're under contract. And one of the more stressful times is the inspection, because that's uncovering things that maybe the seller's not even aware of, but also obviously the buyer isn't aware of until the inspection is done. And that's the most common time that contracts fall out of contract. So the reason I bring this up is having a really strong connection and relationship, open communication with the other party from the very, very beginning. From as soon as we go under contract, we're setting the tone. We're starting on a good note. We're taking the right step forward from day one. So then when we get to other, sometimes more challenging times in the contract, such as the inspection objection is what we actually would call it. This at least puts us in a place where it doesn't mean that they're, going to be more likely to accept our inspection objections, but at least we've got a very, healthy line of communication, and it's just much more easier to get through. And I'll tell you what, it's so much more likely to come to a resolution just when both sides of this part of the transaction are in a good place and respect one another. Don't let emotion become involved. It doesn't become an ego thing, or there's just such a better chance of getting to the closing when we start off on the right foot from day one. All right, guys. So with that, let's just talk about one last thing before kind of moving on to Q&A. And I know there's been a few different questions on here. Ben, thanks for handling those as I kind of go through this. This is just something that we include in the other webinar, and I wanted to include it on this one too, because it's very relevant. Also, I think these are some of the things that are very impactful for a lot of our attendees on these webinars, things that they didn't even realize, or just really, left with a good understanding of maybe some changes that they need to, maybe change their perspective, or just some strategies that are maybe a little bit better executed after understanding this. So 3 biggest mistakes we're seeing. We put this together in 2025, but it's still true today. The first one is this overlooking any of these hidden costs. So, oftentimes when somebody's just getting started to buy a home, they get on Zillow, maybe they talk to a lender and at least get maybe a pre-approval or at least a pre-qualification, so they have an idea of what they're capable of spending, what their budget's going to be. But oftentimes they don't take into consideration all these other hidden costs. And Ben's talked a little bit about this earlier, but whether or not there's an HOA, a homeowners association, what are the property taxes in that specific area where the home is located? Any sort of insurance related questions that might come up with, for example, I just helped some great people buy a home in Evergreen recently. And up in Evergreen, if you guys aren't from Colorado, if you guys are on tonight from a different state, Evergreen's on the western side of Denver, and it's up in the foothills and lots of trees, and they have a higher level of wildfire concerns up there. So they had, some issues with a higher insurance premium. Lots of these costs are things that people don't really even think about until sometimes maybe it's even too late. So I just wanted to kind of share one thing on my end before letting Ben put his 2 cents in on this. But in Colorado, property taxes can vary quite significantly, just even within Denver, for where you're identifying homes of interest. So as an example, in the kind of main parts of Denver, more mature neighborhoods, areas that have, maybe been around for 50, 100 years or more, those typically have a little bit lower annual property tax rate. typically maybe like 0.6, so a little bit over a 0.5%. So if you bought a $500,000 home, you're looking at around $2,500 a year as the annual property tax bill. However, there's areas that are much, much higher than that. And it's just important to understand this, especially early on when you guys are just maybe on Zillow looking at potential homes. So an example of this would be down in Sterling Ranch, which is fairly close to where I live. I'm down in Littleton, so kind of the southwestern side of Denver. There's this newer community called Sterling Ranch. And down there, their property tax rate is about 1.4%. So, over double of what Denver would have been. So that same $500,000 house, 1.4%, that's, you're looking at $7,000 as that annual property tax bill. So that's a big one. Ben, I'd love for you just to share too with everybody about the value of having a connection. Somebody like Ben, where if you guys are just looking at Zillow, for example, right now, and you find two homes, they're both really, really interesting to you. One of them has an HOA, maybe one doesn't. They're in very different areas of Denver. You don't know what the property tax rates are, stuff like that. Ben can, very efficiently, quickly, in a matter of hours, maybe minutes. I don't know, Ben, how quick you are at this, but you could, give them basically complete breakdowns of each of the two properties, breaking all this stuff down where they really understand the true cost of ownership for each of those two options.
Yeah, that's one thing that I do as a courtesy for all the buyers that I work with. And the reason for that is I want them to have confidence when they're writing offers. The worst feeling in the world is to write an offer on, maybe it's your first home or the home of your dreams. You get it accepted, and then you find out the mortgage payment is $1,000 higher than what you were expecting. So what I like to do for all the buyers that I'm working with is I like to have them send me the address, and I will literally go to the county, verify the property taxes. I'll get a homeowner's insurance quote. I'll verify the interest rate in real time, and I will give them a very precise mortgage payment estimate on what their housing expense is going to be. Look up the HOA if there is an HOA, and give them a very accurate idea on what that housing expense is going to be before they even write their offer. That way, they know what to expect and there aren't going to be any surprises. And it just allows them to write that offer with so much more confidence. Or maybe it's higher than they were anticipating, and they don't want to write an offer because the HOA is too high. Again, I am here as a resource. I want to be able to help educate. I want to be able to help guide, and I want to be able to help empower the prospective home buyers that I'm working with so they can make an informed financial decision.
Love it. So the second key mistake to avoid is neglecting home inspections. And this is a big one, you guys. And one little point a side note that I want to share on this one. So you think of a home inspection as something that you're doing on a home that has been lived in for a long time, a home that has some, not skeletons in the closet, but has some potential, aspects to the home that you're not aware of that you want to make sure are identified in this home inspection. And that is very, very true. But what oftentimes happens is with new construction, so brand new homes that have just been built, and as a buyer, you're the first one to ever live in that home. Oftentimes in this scenario, the buyer is waiving a home inspection. The home inspection is usually paid for by the buyer ahead of time, when they're under contract. And oftentimes they just don't think it's worth doing that if it's a brand new home. And this is a big, big mistake, you guys. It's still very, very important to have a home inspection done. Even if you're buying a brand new construction home, there's just as many potential issues that can come up with that type of a home as a more mature, older home. So just be very, very aware of that. And if you're still just, you're hearing me say this and you're not buying it, you just say, Adam, I don't want to pay $500 for a home inspection. The builders are doing a good job. It's a brand new home. A kind of a last resort, or the last suggestion that I'll give you guys, is in this scenario, usually the home that's brand new, the builder will give you a 1-year warranty. It's not going to cover everything, but it's nice to, in that scenario, still have a home inspection done, but do it after you've actually been in the home and lived in it for about 6 to 8 months. So you've given yourself enough time before that 1-year warranty expires, just to, at that point, at least identify any other things that maybe are still worth, having fixed, repaired before that warranty is up. Now, they're not going to come in and, repaint, scratches or scuffs on your paint on your walls, stuff that's cosmetic that's been done by you after owning the home. But for these bigger items, maybe you're really tight on money at the time, you just don't want to spend that before buying the home. I think this is still really, really important. And also, one last thing, if you are buying a older home, there's 2 additional inspections that I have every one of my clients do. For anybody that's not from Colorado, one of them is radon. So radon is this odorless gas that oftentimes is found underneath a subfloor of a home. So if the home has a crawl space, an area that's basically trapping air underneath the home, because of just the soils and the way that Colorado is here in Denver, we have higher levels of radon that can very easily be mitigated if they've been identified during the home inspection. So it's only about $80. And what happens is this radon tester comes out. It's a separate inspector from the main inspector, and they'll drop off this little device. They'll put it in the lowest part of the home, and they'll leave it there for 48 to 72 hours and let it take its reading. And this is a great way if you are a home buyer and you have an inspection done, and this is included, and you identify the rate, the number to be above what it should be. This is a very easy, definitely almost 100%, not a guarantee, but 100% success rate of getting the seller to either have a mitigation system installed, or if nothing else, give you a seller credit at closing for you to then put in a radon mitigation system after you become the owner. It's just such an easy one to get on the inspection objection because it's a health and safety related item, and very, very difficult for a seller to push back on that when it's health and safety. Anything else you want to add on that, Ben, before we move on?
I don't think so.
Okay, sounds great. Oh, and then I'm sorry, I saw Lala ask a question. The second one, so that was the first one was radon. The other one was going to be a sewer scope. Thank you for that, Lala. So the second one is basically identifying any potential concerns with the sewer line. So in Colorado, obviously we have a lot of very mature, beautiful trees, and those trees have roots that oftentimes have a mind of their own. And as they get older, they start to really encroach on different areas underground, and oftentimes can actually be pushing up against the sewer line that's running typically from your house out to the main, which is usually in the middle of the street that your home is facing. If you have certain scenarios like maybe a well, this could be different. But for most of the traditional homes in the Denver metro area, they're going to have a sewer line. So a sewer scope is a camera. Another separate inspector comes out. This one's usually about $120, and they'll put a camera down and basically run it as far as they can, hopefully through the majority of the sewer line, and identify any areas where there might be cracks, where there might be what's called a belly, which is a flat spot in the sewer line where water is collecting, which is an indication that there might be some potential for backups in the future if you buy the home. But more often, it's actually identifying cracks that can oftentimes happen if the home was built a long, long time ago. Those sewer line pipes might be clay, which have a little bit less structural integrity over time. It just gives you an option, again, to see for a very low cost, about $100, $120, just what you're dealing with. And this is one that if you don't have it done and you end up encountering something in the future, it could be very, very, very expensive. We're talking $20,000, $30,000 sometimes if it requires, digging out a ton of landscaping and ground in front of your house just to access the pipe, which might be, 6-8 feet underground at times, and making sure that, you're able to even, access it, to make it even a possibility for it being repaired. So just, again, very low cost up front, but a huge amount of protection and ROI, in my opinion, to have those 2 additional inspections done. And Ben, I'll let you start with this one because this is one that you're really, really passionate about. I know you have a couple stories. Maybe you can share quickly the open house story you have on this one, but emotional decision making.
Yeah, emotional decision making is so important because when you do all the things that we're talking about and you do them in the right order, you can be emotional, but you can also be sensible. You can have a vision, but you can have guardrails at the same time. I always like to share this story from 2 or 3 years ago here in Applewood when I was going, when I did an open house, which is the neighborhood that I live in here. And I was doing an open house and greeting some of the folks as they walked in the front door. And there was this couple that came in and shook their hand and introduced myself. And I asked them, "Are you in the market to buy?" And they told me that they were not, that they were in the neighborhood, that they saw the open house signs, and they just wanted to stop by and check out the property, just living in the neighborhood. Well, about 15 minutes later, they started asking me what was the process to submit an offer. I was like, I just met you 10 minutes ago. I asked you if you were in the market to buy, and you said no. And now you're talking about writing an offer. You were out walking your dog 15 minutes ago, and now you're talking about uh, buying a home. And so when you go through and make decisions that are emotional and they're based off of your emotions, that is where, from my experience, buyers can be susceptible to having home buying regret, or they're buying too much house, or they haven't thought through all the finances. And so you want to be very disciplined with your emotions. I think it's important to be emotional in the sense that, if you're a first time home buyer and you're going to raise a family there, visualize what that's going to look like. Your kids playing in the backyard, running around with the dog, imagining what Friday nights are going to be like, eating pizza and watching family movies. That stuff is important. And it's important to have a compelling vision for yourself and for your family, but you don't want to lead with the emotions and allow that to take control and discretion over some of the financial implications. So once you define some of the things that we're talking about, what is my monthly budget? What can I afford? What's my max mortgage payment? How much do I have available for a down payment? Once you've written those things down and you've defined them, then at that point, you are able to hold yourself more accountable and more in check and not allow your emotions take over.
Yeah, one of the exercises that we share on the other webinar we do is, even if you are a year out or more, just whoever you're going to be living in the new home with, just as an exercise at the dining room table this week, just talk through with everybody, just what are your non-negotiables? What are the aspects of this new home that are non-negotiable? So maybe it's a specific school district. If maybe you have a child that's already in a school district, you don't want them to have to make new friends. So that's really important. You're keeping within a certain school district. Or maybe it's a certain amount of bedrooms and bathrooms. Maybe it's price point. There's a lot of different things, but by understanding what are your non-negotiables, and then take that a step further and talk through what are your nice to haves. So let's just say you each have a couple, you each have a car. A 2-car garage is a non-negotiable. You want to have a minimum of 2 cars, but a nice to have would be a 3-car garage. So first you have your non-negotiables, then you have your nice to haves, and being able to share all of this with your agent. What this allows us to do is to then start to filter down and create a little bit more customized, personal search for your home, where we're only looking at homes that fit certain criteria, and we're completely eliminating these ones that might have a beautiful backyard that pull on your emotions, but then end up not fitting a lot of the other stuff. So it just gets all that stuff a lot more clear early on. And that way you're not having the emotions start to maybe pull on you a little bit, where you end up making a decision that you regret a few years later. So just there's different ways like this to really help protect yourself from making these emotional decisions. So a couple last quick things before we open it up for Q&A, if there's any other questions. First of all, stay flexible, be open to different home types, different neighborhoods. Another really good exercise to understand and do with whoever you're going to be living in the new home is talking through these 3 very specific things: price, location, and condition. So price, what's the budget you want to spend on the home? Location, where within the Denver area, as an example, do you want to live? And the third one, condition. Do you want a brand new home that's completely turnkey, meaning there's no repairs needed? Everything is just ready to be moved in and good to go, or maybe you're somewhat handy and you're okay with a home that has a little bit of value add potential. Maybe it's got a older kitchen that could be upgraded in a few years. Basically understanding these 3 things, again, price, location, and condition, and then identifying which 2 of those 3 are the most important. So if you have a price, let's just say a budget of $500,000, and it's really, really important that you have a condition of a home that's fairly new without many upgrades needed, but you want to live in an area like Sloan Lake, which is a very high, expensive area to the west of downtown Denver, $500,000 isn't going to get much. So having that and being able to really describe this to the agent that you're working with, this will help them really cast a better net and really start to provide you with options that fit what's most important to you. So that was the first strategy. The second one, considering new construction, really favorable loan terms right now with new construction. Oftentimes the builders have an in-house lending team, so they can be very competitive sometimes with their rates. Also at the end of the year, sometimes they're really trying to unload some of their inventory. So there's opportunities depending on what time of year you're looking for your home with new construction. And then this third one, planning for closing costs, understanding again that there's other things than just the cost of the home. There's the taxes, there's with closing costs, different things that can be negotiated in the actual contract for who pays them. Is the seller paying for this? Is the buyer paying for this? Are they being split 50-50? There's a lot of little things like this that are very important to understand before writing the offer up, to make sure that you're getting as much of that in your favor as the buyer. You're having the seller pay for as much of that as possible. Also, guys, I'll share this in an email after tonight's webinar. I did over 2 hours worth of videos. It's a 5-part video series. It walks you through the entire home buyer journey from start to finish. So if there's certain parts of this that you want a little bit more educational resources on, maybe it's the writing the offer portion, or maybe it's just the searching for homes portion. All of this is really in-depth and covered in-depthly on this video series. So I'll share a link for that in the email that's going to follow tonight's webinar. And Ben, for next steps for moving forward, if it has anything to do with a pre-approval or just more financial literacy related questions, what's the best way that they can get a hold of you?
Yeah, what I'm going to do is I'm going to drop all of my contact information in the chat here. It's going to be my electronic business card. So that'll have my email address, my phone number, my website. So save that. And then when you are ready to schedule a call, even if you want to have questions, even if you're not ready to apply or take an application, that's okay. I love having financial strategy calls. So if there's something that's important to you from a financial perspective, it's important to me. So let's schedule the call. Don't hesitate to reach out. I'm always a phone call, text, or an email away.
And I think the biggest takeaway for a lot of our past attendees on our webinars is just understanding that education is something that can be done at any point, especially early on in this process. So, if you're still feeling hesitant right now with all this stuff going on in the news, interest rates being higher, all these factors that we've talked about that are affecting affordability, if you're still not confident and comfortable with getting into the game now, you still have other things that can be done to put yourself in the best position possible whenever it does make the most sense for you. So just because you're not ready today doesn't mean you should just, turn on Netflix and not even put any effort at all into all these other things that you can be doing today to make sure that you are in that best spot when the time comes. And a lot of that comes down just to education and just resources that you're consuming, whether it be some of the stuff that we'll be sharing with you tonight on that follow-up email, whether it be different YouTube channels. Ben's got a great one called American Money 101. It's all about financial literacy. If you guys haven't checked that out, definitely also check that out. But more than anything else, you guys, just the more preparation and time spent ahead of time, oftentimes those are the ones that really win in a market like today that's very competitive, but also a little bit unique. So again, I'll be sharing all this with you guys later on tonight. So stay tuned for a follow-up email. And I'll also have Ben's info in that email if you guys hadn't had a chance to check out his digital business card. And with that, let's just see if there's any other questions. I know a lot of those, I think, got answered. Ben, thanks so much for handling the chat tonight. I know everybody's time is valuable, so we're coming up right on an hour. So if anybody does have follow-up questions, feel free to ask them in the chat. And if you don't feel comfortable asking them in the chat, Ben and I are always available just to do a one-on-one strategy call, either both of us or one of us, depending on what the questions are. So don't hesitate to book one of those calls.
We talked about strategies for success. We talked about what's working. We talked about temporary buy downs, affordability concerns, how to overcome those, down payment assistance, reduce down payment. If you have any questions on those, temporary buy downs, down payment assistance, please put those in the chat, or you're welcome to come on camera as well.
Yeah, thank you, Lala. Thank you, Kathy. I think I saw Jim. Thanks for the questions and engagement tonight. And again, guys, if we kind of piqued your interest with some of those strategies that I mentioned, feel free to join our next regular webinar. We try and at least do 2 of those every month. So stay tuned for the next one of those. All right, we'll just hang out for another minute. But if not, everybody enjoy the rest of your evening. Thank you so much for your time. And we really are serious about hopefully connecting with you guys individually and learning a little bit more about what excites you with Denver and the real estate market, and hopefully find a few different ways that we can provide value to you, whether you're looking next week, next month, or next year. All right. Hope you guys all have a great night. Thank you.